This is going to be a brief review of my trading so far today. We've just had the London session and it's now 7:24, and I was going the wrong way. I was bearish, wanting to see this low taken out. However, I then flipped around and thought, you know what, we're probably going to reach up to EQ. So I was looking for a long throughout this range and somehow missed or ignored all the signatures that we were in fact going to head lower, and yeah, missed my move. I still think I'll be able to catch this because I am wanting to see us go down to this level down here, 310, and as you can see, sorry for all the drawings, but we've just hit center range here and turn range, and then broke external range on this low, meaning that this high is all internal range within a downtrend on the hourly time frame. So we've just traded to internal, rejected that, and we're trading lower, and so we should very nicely expand lower in alignment with the high time frame trend. Very high probability. How I'm going to get short is I'm using the new day opening gaps from the previous day high that we just rated, which includes this previous day high from Tuesday and also Friday last week. So if I turn on drawings, you can see a lot of lines. I know I can delete half of these, but as you can see, that purple box represents the new day opening gap from this previous day high, and then the same thing here. This purple box right here represents the new day opening gap from this previous day high, both of which should act as resistance after we've accumulated above those levels. So I do see this as accumulation above those levels, but then when we're so extended like this to the downside, what I like to see is a lower time frame accumulation as well. And what that would look like is if we were to, let's say, put a do a 3 drive pattern and then get back below, that could be a short. Or if we just anything that indicates that we've taken liquidity up here, we've accumulated more shorts on the lower time frame, and then I can catch a continuation using these two levels. That's my game plan with that, but what I want to break down real quick is what actually happened in here. Don't really need that right now. So essentially I saw how we had this big rally the previous day. New York session engineered relative equal lows and then climbed high from that. So I knew that we had traps longs above these levels. And also any trailed stops throughout the day would be drags to these lows as well. We had sold off overnight after taking the previous day high, dropped down below the sell side, and then started returning back up into the range. Gold most of the time will, always return to EQ of every range that it has, and so I thought it's a good chance because we're so close right here that it at least reached up to EQ. Also potential for it to run up and tap the previous day high again before selling off. And so although I was bearish, I figured, well, I'll take a scalp to the upside on the way there. And then I did notice that I did actually have a model that allowed me to do that. And that model is using the trailed old low. So an old low that trailed stops resided at, which is very obviously this low right here, the dotted line. If I'm bullish, once we get back above those levels, I like to see those arrayed below that level and then us to continue high from there. And we do get that, where we put a short-term low there, we take it out, and then we make a new high. So I suppose you could say it did play out, but I was wanting to see us get up to there. Initially, I bought as we rated this low, expecting that we could potentially come down as far as this short-term low, and you can see we just fell like one tick short of it. Yeah, one tick. So I had my stop sitting just below that, and and we dropped into that very nicely. When we dropped into it, I was watching price in through here. I noticed how we actually disrespected the midpoint of this wick, and so that did look very sketchy. But then when we immediately reversed out of that, I thought, cool, this should be a high probability failure swing, because we disrespected the midpoint of the wick and then immediately rejected back out. Sure enough, that ripped up, took a partial, took 50% off up here, and then I was away from the charts, and so it came back and took out the other 50% back around my entry. So that's all good. So in here you can see that we were very high resistance, very range bound. I recognized that quite early on. I mean, with the sell-off right here, coming so deep into the range, as well as the fact we had these relative equal lows, I figured that, okay, well, I am bearish high time frame, so we're in a consolidation. If we're consolidating, it means that following the consolidation, we will expand in the direction of the trend, and currently this is a reversal, expansion, consolidation, and so it should expand next. So I was still comfortable taking longs after this drop back down. I didn't get in initially because I'd just been stopped out. However, then when we had this rally up here, I saw this nice value gap. I figured, okay, I'll just buy that. And as you can see, it just melted back down. Now, because I had already recognized that we were in a range-bound condition, we were likely to head to the extremes of the range. I should have known better than to be buying above the midpoint of the range. You should be buying at a deep discount of the range. But yeah, got stopped out. We then ran up through the high. We took out this high. Obviously, we didn't hit EQ yet, and I was still focused on this as being the upside drawer. And so what I saw here was I saw how, okay, well, we've just hit EQ. I got to the charts just after, like I looked back at the charts just after we put on this low. This had just taken this impulse low out. So a nice rejection there. And then following that rejection, I also noticed how if we look at this range from this high down to that low, that's the dealing range, we painted both sell side delivery and buy side delivery multiple times, meaning that this is now a balanced price range. So after having broken the high, we should respect the midpoint if we're bullish. Respect it there. We work below it here, but the bodies close back above. And so right in this area, I thought, okay, well, I can see us returning back to the midpoint and then expanding out once again, taking out this high and hitting EQ, which is a very reasonable assumption. So other than the fact that I took that long up here that was at a premium of this consolidation range, this range bound condition, other than that, I didn't do too badly with my other entries. I can quickly grab a screenshot of my MT5 just to try. Let's see. There we go. It fits. So on the MT5 you can see my executions. So that was getting long initially. We got this spike up. The spread's actually quite bad on MT5 for GFT. It's about that. So by selling there, when I bought all the way down here at a deep discount. So it's actually a decent run from that area there, the low, up to there. But because of the spread, it actually gave me hardly any movement, which is kind of lame. But yeah, bought in this area below these lows, having to use a much higher entry. So my entry was actually down below this low, but because of the spread, and then catching it up to there, taking it partial out, left that runner on, and wasn't at the chart, so it came and stopped me out for a small loss. I did actually initially jump straight back in, but then I recognized, okay, that's just dumb. I shouldn't do that. And then once we did push higher, So at this point I knew, like right here, I was like, okay, really deep retracements, but in a bullish direction currently, so we should actually head higher for a bit. And because of that, so just managing a NASDAQ trade real quick. So because of that, I shouldn't have been buying at a premium of the range, and then I ended up getting stopped out at a discount. When I recognize a condition like this and I'm expecting expansion following like that, I need to only buy at a deep discount, and then most importantly have the stop loss at external range, so below the actual low, because if we are in a consolidation, if we are in range bounds and we're going to expand next, that means that one, we can disrespect both premiums and discounts and then still continue in that direction, which is exactly what we see here, disrespecting the midpoint of the wick, deep discount of this order block, taking out all these intermediate term lows, making smooth lows. Like all these arrays should hold if we were bullish, but because we're in this range bound consolidation, it can come to the extreme. So that is the only invalidation point, is external. So when I recognize this condition right here, deep retracement, but we're bullish and we get this rally up, I should be looking to only buy below the midpoint, ideally in the lower quadrant, so down here, and I would always have my stop loss actually below the low. So that's what I should have done. As you can see, I got stopped out there. I didn't get back in. I just let it continue doing what its thing, walked away for a bit. Then eventually we get, us dropping back into the range. This box that I marked out because I recognized that, okay, if this was a breakout above these relative equal highs, it makes sense for us to first pull back into the range, stop out any breakout longs, and then on the next run through, then I'd expect it to be an actual breakout. So I was imagining that we'd do something like this, since we'd already tripped in longs, taken their stops, and I was expecting that. But I thought that could be a great place to add in here, which it would have been, but we never got that. But I also figures that, well, if we're in this consolidation, midpoint should now hold. It has been holding so far. I'm going to buy, go long. You see me buying right there. Was watching this wick. It did kind of look a bit sketchy because a lot of the time they'll print those kinds of things in order to entice longs into the market. Let's close out a bit more of my NASDAQ shorts. Also need to be making sure that I'm not missing, where are we? The move. Nothing yet. So got long. As it rolled over, I started figuring, okay, it's definitely coming for this low, but as long as it gets a nice strong rejection there, I'll buy once again. So I bought as we hit that low. And then it just kept on pushing lower, and I did really well here actually. Like looking back at it, at the time it felt like I was trading like absolute trash, but to be fair, I was making reasonable decisions. I was just too focused on the longs and ignoring the fact that, we just rated equal highs while we're bearish, we're leaving perfectly smooth lows, we're at a premium above the 5 a.m. open. So a lot of signs that would tell me that we are actually bearish. But to be fair, like this is a perfectly good entry using my actual model, using the super entry. I could have done a lot better here, obviously, by having, like watching the charts, I could at least be at break even at this point. Shouldn't have taken that, but good thing that I closed it out straight away. This was a mistake, and because this isn't my entry model for one, like I don't use buying a fair value gap as we're rallying as an entry, but I figured I'd give it a shot anyway. So I could have avoided that, and then obviously I'd already recognized that we were in a range bound consolidation. Deep discount of the range is the only place we should be buying. But I did a good job at walking away after getting stopped out. I was really frustrated. That's probably partly why I felt so bad. Like I I'm this close to going on tilt today. Well, I was very close to being tilted. And you could argue with a few of my executions that they do look kind of tilted, but still walked away, which is good. Got back to the charts here. This was very reasonable to assume we would continue higher. EQ is a perfectly reasonable target. Sure, I was bearish, but I did recognize that, okay, we are respecting the midpoint of the range, as you'd expect. We've taken out sell side. This could expand higher. And so buying at the midpoint of the range, that's perfectly reasonable. And then when we did get down here, if I measure out the midpoint of the range real quick, just so we can see it, so that red line is the midpoint. We started closing below that midpoint, and at this point it was very obvious that, okay, it's not really doing it. That's right there. I bought after that, so I could have got out a lot earlier. I ended up getting out right down here, where it was, super obvious that we were clearly not staying above the midpoint of the range. I could have done that earlier on, especially once we closed below the midpoint of this wick. Like right there, on that candle there, that should have been my exit. That could have saved me a bit as well. And being bearish overall, like it would have been great if I could have just switched around and been like, okay, cool, I can now see that we're showing this bearishness. I should be able to just jump in on the short side. I just didn't quite have that flexibility, especially after having taken so many executions throughout the day. 15 minutes doesn't really stand out as anything super easy for that. The only thing that jumps out at me is the fact that we had this big up closing candle, then enticed longs, failure swing, then just working our way lower. But nothing particularly stands out as super easy to have got involved with. The only thing that really jumps out is having recognized that we are disrespecting the midpoint of the range, just using this wick. But the only issue with that is, like, what time of day is this? Maybe I need to use time of day more. This is at 6:20-ish, around 6:20. But when we're consolidating like this, like you can measure out any one of these wicks in this range and say, okay, I'm going to use this wick for a long, I'm going to use this one for a short or whatever, and they're not going to work because we're consolidating. But I suppose at this point we have one expanded, and then by closing back below the midpoint of the range, it is confirming that we've now reversed, because otherwise if we were going to expand again and this was just a retracement, then we would have respected the midpoint of the range. So I suppose once we have gone from consolidation to expansion and then confirmed a reversal, you can now use PD arrays within this range because it is now no longer in that range bound condition. So that's potentially something that I could think of in future, is if so I can trust PD arrays to act as support and resistance if we are no longer in that consolidation range bound condition. And to identify that, I just need to see, did we or did we not expand out? Yes, we did. And if we expanded out, then either we're going to respect the midpoint or we're not. And here we didn't. And then we started showing resistance on these bearish arrays that you'd expect to hold in a bearish condition. So that could have been the short. But yeah, it's lovely to see it have this beautiful melt as I expected. Lower. If we zoom out, you can see where we actually reached all the way down to this impulse low from 740 right below this rip up. So looking for us to continue lower. That's midnight from yesterday. That'll be a very easy target to reach for as well, because we didn't return down to it during the RTH, so I'll make that a dotted line. But yeah, so that's the business there. And you can see some buyers right there actually. What that is me, jumping back in. So that was very impulsive. I thought, okay, well maybe we're just going to take out these lows once again, and then it's going to rip up from there. So I bought, got stopped out immediately, and then it just melted. So right now I'm just waiting for it to become clear that we did accumulate buy side above one or both of these levels. Once we do that and we get back below, I will look to take a short off of this level. For NASDAQ right now, I made a little mistake on this today. So we zoom out a bit, just do some analysis. Sold off a whole bunch. This retracement, like where are we retracing to? Well, to me, buy side is there. That is buy side. And so the fact that we've come into such a premium, it just looks like they're squeezing out anyone who tried to catch a short, anyone who's trying to sell this pullback. Like everyone's like, okay, cool, jump in short here. Okay, it's moving in our direction. Oh, add to the short. I know it's coming up further. Now everyone's getting hopeful. But what jumped out at me on the 1 hour chart is if we look in here, we can see that we've actually got no wick 3 p.m. candle. And also this rally up through here. It makes sense for us to target some sell stops as well. I much favor the longs. And so rather than it going up first to go down, if it goes down first and then goes up, that'd be ideal. So I'd actually like a long from down here. But because I saw that we were very likely to take out this impulse low, and then we had this obvious PD array below it, where I'm interested in taking it long from, I figured that this could be a great short. Now the mistake I made was we were pulling up through here. I tried shorting in this area above that short-term high. So above this high, I tried to go in short. And as you can see, right at 7 a.m., we worked up, took out this high, then sold off. And as soon as we did that, I was like, I see exactly what I did wrong. From the high, from this high down to this low, that's the dealing range. We break that dealing range here. And then when we retrace, we fail to reach EQ of that dealing range, which is where I put this line. So now we expand lower again. So now this is no longer, the dealing range now becomes this. So this is now at a premium of this dealing range from this high down to this low. So I was trying to short below that when it's really obvious that we clearly engineered this high specifically to take out. So I could have really just taken up a partial and trail the stop. Show my executions on that as well. By getting short here, it was just a bad place to be getting short. That pissed me off for sure, and I'll show the executions because it did stop me out right at the highs. And then I recognized what I'd done wrong. I was able to get back in, being quite flexible and not demanding we took out this high. I recognized that, okay, this looks like a shift. I don't like the fact that we didn't get a second closure back below it, but we did here, which is beautiful. But we did break through this low and we had just taken premium internal range. So I figured, okay, well, we're likely to retrace back into this wick, but we shouldn't take out that wick high theoretically if it is now an intermediate term high. I'm going to hold this short a bit longer. Just working out the best spot to take it off. I think I should be able to pretty easily get most of the way down. The 50 is down there. So we're looking at, I like this, like I've got a long wick plus this displacement. If anything, that's telling me I should be just holding and not trailing stop at all. We should get a nice expansive move right now. Probably easily reach down to there. So I've got my stop and profit. I'll put it at the invalidation point of this. So the high point of this fair value gap, that's where my stop is. And let's see if we can catch a nice rip lower. A bit further. I mean, we did just hit external. Since we did hit external, I mean, this signature does show heaviness, but hitting external couldn't also be the target, so maybe I should be trailing this off a bit. I've only got small size left on, to be fair, anyway. I'll trail it a bit and then let it work. What was I saying? So yeah, I wanted to short up into premium. I thought, okay, well, option one, it comes back up above this high, and that could be a nice entry. But because of the nature of this wick, if it were to do that, it would probably be going even higher. And what jumped out to me as a nice narrow term area was this impulse high up here. And so I dragged that out, and you can see that that lines up nicely with the 20s as well, which is right there. So I got short in this area, and as it started rolling over right here, I got very confident that, okay, this is looking really good. So I was happy to hold this. Took a partial as we hit these lows, and then held through this range. I really wanted to add back on above this short-term high. Never gave it to me though, and then it's just rolled over lower. But yeah, the major lesson from this is really just identify the range you're using. Like, it's such a basic thing, and something that used to be a big part of how I traded was looking at these ranges, but sometimes I just didn't even notice it, and I was sitting in like this area right here thinking, okay, well, I think we're going lower, how high up are we going to go, not looking at that at all. Well, this should be enough, this buy side right here, this M5 high, I reckon we just hit that and go lower. But rather than doing that, actually have a more objective approach by going, okay, what is the dealing range? Well, we just broke this low, high to low. Oh, look at that. Engineered buy side to EQ. Very intentional. Would have given me a lot of confidence of shorting up here and not shorting down here. I just got stopped out then on the runner. And that's because although this is a bearish signature for long wick and then displacing afterwards, the fact that we hit ERL could retrace back up into the range easily from there. So just got stopped out, but still a really nice thing. I'll just bring up the executions real quick. Just screenshot that. I'll paste it here. So that is me getting short above this high, trying to short this internal range, and then that 7 AM spike taking me out perfectly at the high. I immediately noticed what had happened, got back in, then I was like, no, screw that, it's a bad idea, got out again. So that's something that, a pattern that happens quite a bit. I'll get taken out, feel really frustrated, and get straight back in, and then I'll fix it and get out again, because I know how it ends if I just jump in and stay in again and again. But then back here, shorting at this high, there's a stop loss above this high, and then that worked out nicely. Took a partial there, then as we sold off, took a few under these lows. I remember that we do have a spread of about that much. So as we hit these lows, taking that partial, and then a few more partials down this discount of the range, and then that was my stop out just then. After we traded lower, trailed my stop down a bit, and just got stopped. You can see that spread doing its job. So yeah, that is the business on NASDAQ. If we do hit that no wick low, I'm very interested in a long from down there, and what I'd be looking for is for a lower time frame reversal signature, such as accumulation, a market structure shift, or something like that, and that'll be the way I get in. As for gold, if we look at 7 AM, we've been trading higher after having made a little wick below. It looks like the PO3 is bullish for 7 AM. Be looking for 8 AM to likely run out the 7 AM high. If we can do that, break back below these gaps, they can make a nice short to the downside. So yeah, that's the plan there. But yeah, I need to there are just issues in my trading, and it's hard to know exactly what they are and what I need to focus on. But it was interesting to walk back through this today and see exactly what I did and my logic behind it. I mean, it didn't feel logical at the time what I was doing. Maybe it's just in hindsight I can explain away why I did things. At the time, it felt like I was just being tilted, if anything. So I don't know if that. Yeah, I think I was making decisions that might have been kind of correct decisions in a sense, but I wasn't doing them from the point of awareness that I was doing the right thing. It was more from frustration of what I thought was right not working, and then me just trying again. Um, so not really the right way to do it. Yeah, that'll do for this quick review.